What's up? Good morning, guys. We are live. Let's get into it here today, Thursday. Volatility is maybe a little bit down. ATR is about 16 right now. We've seen between 10 and 15 range on these last few 2-minute bars, but we can make that work. If we look at the daily chart quick, bottom of your screen, range market on the daily, right? We look intraday. Let's zoom in on the 5-minute here. We had an attempted breakout not long after the open that has now faded back into the range. I would classify this as a range, especially in the last hour, the last 55, 60 minutes. So what we're looking at here is range on the daily, range intraday. Put our head down, scalp, use limit orders, use stop entries conservatively, but we will break it out if necessary. Though buying above bars, selling below bars using a stop. You can see if you look at the chart, well, actually, if we look at the 2-minute, we can see it even better. There's not really a lot of great opportunity to people, had we done that, we would have been struggling to make money. But limit order scalping, so far with this movement here in the last even just 20 minutes, could have gone well. So that's what I'm thinking here today as far as market context. Market inertia, right, is range, range, range. Use limit orders, break out a stop entry if I can, but I'm not rushing to do so. Okay, that's my thought process here. Let's get into it. We are 18 seconds out from the close here of this 2-minute bar. Good morning, guys. How we doing? Javaz, Tony, Jason, James, Taz, good to see you guys. Kane, Bruce Lee, Carlos, Derek, what's up, guys? How we doing? All right. Well, here comes the rollover of this bar inside of this little range. Let's see. We'll look at the 5-minute as well up here. Again, 5-minute if you're new here, 5-minute top left, 2-minute top right, daily on the bottom here when we look at the 3-chart view. Callan, good morning. How we doing? Giovanni Joe, good to see you. Peter, Bruce, what's up, guys? All right. Okay, so this range, go with the updated level, about 54. Okay, so we're looking at a little more than 40 points. Well, I'm sorry, 30 points in this little range here. That's not too bad. 30 is kind of, in the past, I think I've said 25 is kind of my minimum-ish. You can make 20 work as far as the width of a range, top to bottom. 30 is better. And right now we're looking at about 31, 32 points as far as the width of this overall range. So we can make this work. Until it breaks, of course, right? Lord of Fuse, good morning. How we doing? Okay. Well, there's a small, again, I'm looking at the 2-minute primarily, top right here, your screen. Any supporting factors on the 5-minute, that's great. But right now, I want to execute off the 2 just because the 5, in this environment lately, the 5, it's just kind of wicky. It's kind of slow. I feel like the 2 is acceptable to trade off of. For a little while there, the 2 was just unacceptable. It was way too wicky. But when the 5 also starts to get kind of wicky and the 2 is a little bit cleaner than it was, you know, I really prefer to use the 2. So we have a minute 20 out from the rollover here of this 2-minute bar. And right now, this is very simple. Again, range on the daily, range intraday. Right now, I'm just very basic buy low, sell high mentality. If the setup is there and reasonable, gotta take it. So, you know, this market's kind of been sucked right around 23,000 for honestly longer than it's felt like, at least to me. Because the volatility was actually decent. We had a lot of hope of maybe seeing a breakout here on the daily, maybe. Back here, I remember like these couple of days, we were talking a lot about, you know, hey, the market's trying potentially to enter a trend. But if you guys remember on maybe this day, I said, I think we're probably going to see it turn into this. Same kind, and that's kind of, I mean, I hate to be the Monday morning quarterback, but like that's kind of what we have seen. Unfortunately, I was kind of hoping I'd be wrong and we just break into a trend so we can all make a bunch of money. But let's make the range work here for us, okay? So, right now, I mean, really, I want to see it backfill. Because we know everyone's kind of looking at this, right? But struggling with this wick high is not exciting. So I gotta say, I'm curious to see if this turns into a flat bottom. Meaning this gives up this wick low and this wick low and then test this little flat bottom here. And when flat bottoms start to form in a market like this, eventually when the little range does pick a direction and break, slightly more often than not, I'm talking like 55, maybe 60% of the time, it's gonna pick that flat bottom. Or flat top, if it's inverted. We're getting a few headlines here out of Diamond, of course, CEO JP Morgan. He said, I would price in a 40 to 50% chance of higher US interest rates. He's not really saying anything we don't know at this point. Okay, I think we're pretty much free to trade as we please. Marshall, good morning. How we doing? Man, I'm not a fan of when the market does what it's doing these last 10 minutes. You know, I'm not going to sit here and bitch about the whole day. The whole day is fine. I mean, we've seen decent volatility. It's just when the market starts doing this at 11 o'clock Eastern, it's a little frustrating. But luckily, lately, even if it does do this, it tends to increase a little bit more. Oddly so, volatility tends to increase during the lunch period when it does this in mid to late morning. And then sometimes even in the afternoon, we've seen double ATRs. That's average range of a 2-minute bar than we saw like this time in the morning. So let's see, man. These dojis at some point got to pick a direction. Jamie Dimon says real data on the U.S. economy is totally impossible to read. I think you never see a positive headline coming from this guy. Must be sitting big net short or something. What time frame are we on? This is the 2-minute chart. Top left is this is the 5-minute, 2-minute, daily, only showing the New York session, and then our main execution screen right now, this is a 2-minute. Sometimes this will be a 5-minute. Right now it's a 2-minute. Joe, getting close on passing these 10 evals. Today's the day. Hey, you can size down into the finish line, take your time, take good trades, and get across. But that being said, don't put so much pressure, you know. I know a lot of people, they start getting close and they're like, I can taste that shit. Just take it easy. Take it easy. Slow down. I like to size down a little bit into the finish line, but it's not like I'm sizing down into 1 micro into the finish line, right? Because when I'm trading evals hard to pass them, I'm trading minis. So sizing down usually looks like 1 or 2 minis, which obviously is very different from how I trade the fundeds. But again, opportunity cost is a thing. So you got to make whatever decision makes sense for you based on your current business model, how the numbers look for you, whether or not you're getting an ROI yet, right? All right, you see this inside close here, inside of this wick? This bar is really important to me, though. If we can see a close of this bar below the, honestly, just anywhere below the wick low here of this previous bar, near the low of the current bar, right? And so what I don't want to see is a big wick down and then a close right here. Any reasonably clean close below the wick of the previous bar, and I would get short on the rollover. That's 1 minute and 15 seconds out. Let's see if we can get that. However, again, you got to keep in mind here, this right here is a range. So little attempts like that, unless you really get a hard fade, like a hard rollover look, little breakout attempts like that, a lot of times are going to fail. So we got to see if we can close beneath it. Not just test, but close. Do you prefer VWAP or EMA? I like them both. I don't know. It depends what you're trading. I mean, on small cap momentum stocks, for example, I think they're both reasonably important. It's just, what are the humans watching? VWAP is probably the realest one. On futures, I just throw up a 20 EMA. I could swap this out for volume weighted average price. Honestly, I think a lot of you guys asked me this question. I don't have a great answer. I think a lot of the reason why I originally just threw up a 20 EMA instead of volume weighted average price on futures. Hold up, we got to get ready here. Here, I'll show you the 5-minute as well. See that top left and top right? We'll see if we get that close. And we will. Okay. Okay. And there we are, and I'm sitting short. Let's see if we can get a little bit of a dip back down into backfill this whole range rather than just this little guy. So, and there we go. There's the open P&L in the position. I think a big reason why initially when I was setting up my charts for futures, I threw up an EMA and not rather than volume weighted average price is because I do prefer volume weighted average price because it's like the realest thing that a lot of people use. It's probably my favorite all around like indicator. You guys know I'm not a huge indicator guy, but it is like the realest one on stocks where volume is very important. Now in futures, you guys know how I feel about this. It's like staring at the depth meter in the middle of the Pacific. Is it really all that necessary? I think in a lot of cases, you can pull little nuanced ideas like, wow, volume really increased as it broke out. Was there news? That would make sense, right? But in a lot of cases, it's like staring at the depth gauge in the middle of the Pacific on a sailboat when you probably could be worrying about something else like the weather or, you know, the wind or whatever. Mental capital is not unlimited, and I think you should focus on what's really important. But to answer the question, I threw up an EMA, I think, because I look at volume weighted average price as a little bit more meaningful. And I'm not a big indicator guy anyway. I just wanted something up to, in a way, make me feel like not dizzy. You know, like I kind of know where we're at. Just something that I know what it is. And okay, that's where we're at. Right. One thing is plenty for me, and you guys see on the 2-minute chart, I don't really even pay attention too much to the 20 EMA on the 2. Now on the 5-minute, which is this, right, I watch it because other people watch it, self-fulfilling prophecy mentality. It is important on the 5-minute, right? On the 2-minute, it's far less important. All right, so let's see here. I want to see how this next bar closes because this bar here, inside close of this previous bar is wick. So if I were sitting flat, I could not get long here, which means I got to let this work and see how the next bar closes. We are 1:20 out. Eagle, good morning. How you doing? $50 seconds left here on this 2-minute bar. All right, 10 seconds. Shrinking bull body. Bear is trying to wick it back a little bit here. Yeah, shrinking bull body. Oh, this is actually going to be very telling here. I'm very intrigued to see what occurs right now. Because this here is going to give us the answer. Hey, what's the look? Is this the look? More or less, right? It's never going to be perfect. Or are we still going to maintain what it looks like as the bull case on the 5-minute chart, right? Which is this ascending bull channel. There's always two sides to every trade. Right, I prefer to look at the enemy's side first. So the 5-minute is the enemy's side right now, of course. Little ascending bull channel. Now, if we do maintain that, then all of a sudden it's like, all right, I'll lay down and just try to get long near the bottom of that channel until it breaks. But until that's the case, which would basically mean it has stopped me out at that point. Until that's the case, I'm sitting in my position here, unless something changes. Do you like algo trading for scalping? Honestly, okay. I've gone on this rant before, so I'm going to keep it very brief. My opinion on algo scalping is this. I like trading. I don't want to just sit here and watch a robot. I like trading. If you don't like trading, but you love programming, then you should, but you want to be involved still in the market, then you should probably focus on developing an algorithm because you prefer programming over actually trading. So you spend your time programming, let it trade, and you spend your time while it's trading just monitoring it and cleaning things up on the programming end. I can program all right. It's okay, it's fine. But I love trading. And I can trade better as a human than a robot in 2025. Will that be the same in 2040? I don't know, but I don't think we should overestimate the ability to write an algorithm that can make better discretionary decisions than you can as a human, assuming you have a lot of experience. So my answer is no, because I like trading. And I understand that whole business of high frequency trading. If you're trying to do things quick, it's a really tough game because you are at a physical disadvantage because your distance from the exchange is far more. And obviously information can only travel at the speed of light. So that you can't compete with that, right? And that's what those firms are doing. They're moving next to the exchanges, paying whatever the hell they need to just to have a shorter distance to cover to get their orders in. Now, obviously, with retail algorithms, people aren't probably, hopefully, trying to be high-frequency traders. They're just trying to write an automated process, and my thought on that, again, is I can make better decisions than a robot, and why do I want a robot doing what I want to do? Because I enjoy this. If you hate trading, I don't even know if you would have the experience because you don't like doing it. I don't even know if you would have the screen time to have the experience to write an effective algo over time. Maybe if you just don't like doing this, you should focus on a different industry, a different big money industry. But if you're like, yeah, I like trading, I just, I don't know, I like programming more. That would be someone who I'm like, okay, then maybe try to write an algorithm. If you're really good at programming, you're gonna have to program a lot of discretionary decision making into it to perform at all like a human can, at least on the retail side. All right, we got 48 seconds left here on this 2-minute bar. It's kind of teasing the top of this, what would be a little bear channel here. I mean, let's see. Chris just loaded on a couple more Apex accounts using code BIG. Good to hear it. Now, I mean, the probability here is that we're going to get stopped. And then once we do, things start to turn into kind of a weird look. I mean, there's just so many arguments at this point. This setup here, again, I sold the close of this bear bar, and this instant reversion kind of thing, this is relatively rare. So now there's a lot of looks. I mean, we're looking, the bulls have this case, right? Okay, we are flat. The bull case, there you go. But then, you know, the bears kind of also have, hey, you know, what about this wedge? So I think what we need to see here is, does this bull move retake this wick high, which would be the high of this little move here, about 87, we'll call it. And that, if we look at the 5-minute chart, would return us to this bull case. And that's a pretty damn wide range, honestly. That's 60 points, which would actually be a good thing. So now let's see if we can break this little test of 80, we'll call it 87. Which ticker is this? We are trading the Micro NQ. Scaling horizontally across prop accounts. Chris, blew a group of accounts this morning thinking I was finding the bottom. Emotions got the best of me. Been doing this for a while, but sometimes you have those days. You know, Chris, trying to time the bottom, trying to time the top is a really, really tough game to play. I'll tell you that. It's a very tough game to play. And in prop accounts, you don't... I mean, arguably more so in personal accounts because it's your money on the line, but especially in prop accounts, with the tight drawdown, which is on purpose because they're betting that you're going to trade too big. We just don't have the room to start taking bets on reversions before we get confirmation or swing trades. You can take little scalp bets on reversions, you know, because the risk is relatively small. But on a swing trade, you have to risk so much that you basically have to get the timing damn near perfect within a couple of minutes. And without confirmation, that is just very difficult to predict when something as big as the Nasdaq is going to flip. I think we've all been there, man. You've all been there. I think it's something we just grow out of. Okay, so we have 27 seconds left in this 2-minute bar. Let's see how it closes. Again, we broke, man. $15 seconds. Nice strong bull bar. Coming into 23,000. Almost this exact trade yesterday. But if we get a clean close, hold up. There we go. Gotta put it on. I will start my initial risk right about there. Extend that a little bit. There we go. See if we can get a continued push. This is still within the day's range, by the way. It's all good on that front. But again, the bear case here now is, wait, that's an ascending resistance level. Yep. This is also the strongest bull push we've had just about all day. No, AKS, I don't do the copy trading shit. It's garbage. The old teach a man to fish thing is very true. Jacob, this is on the 2-minute. All right, there's an attempted push up through 23. There we go, a little bit of a pop. $23,000, by the way, it's going to be a tier 1 level. We've seen this a lot in the last week. Kind of hanging out around it. Oh no! Good morning. How we doing? All right, we've got 48 seconds left here on this 2-minute bar. These bulls are wimping out on me here. Damn good setup, though. I really do like that setup. But hey, what's the bear case, right? I mean, we always got to look at that. The bear case. This is part of the bull case. The bear case, though, of course, is... Wow, there's an ascending resistance there, right? Yeah. Yes. However, every trade is always between 40 and 60%. 10% of the time you can push, again, probability that I'm talking about. About 10% of the time that probability can push out to between 70 and 30, particularly when volatility is high. All right, and again, this assumes a 1-to-1 reward to risk just to keep the numbers simple. but the edge that you can get remains the same, whether you're doing big reward to risk or negative reward to risk. All right, wick back on that bar, gotta leave it. Oh no, passed an eval, good work. Good to hear it. Well, there we go. There's another attempt at 23. Let's see if the Bulls can actually have a backbone this time. It's actually a pretty damn good close out of the Bulls there. That's the best close we've seen, the most definitive close since my entry close. It's not bad to see. What do we get to here? ATR is right about 14 and a half. Again, kind of tight. We can make that work, but I can't be sitting around making 80-point asks out of the market right now, you know? It just doesn't fit the context. So I really kind of want to see a press up toward at least 23.10 to the upside to even think about this. We've gotten as high as about 23.6 on the wick here of this bar. All right, Bulls, give us a bit of a pop through. Come on now. Yeah, I mean, that's a fine close out of the bulls. I'll take that close, but we did close inside or right at basically the previous bar's wick high. Definitely could improve on that. I want to see us get at least a breakthrough again 06. Maybe pop us up toward 10. I'm driving manually right now. Fingers on the hotkeys, but don't you hate when the market does this? It sticks around one level. Kind of tanks off ATR. What are we at? We're about 13.5. That's not the end of the world. It'll be better. There's another test to the high here, a little flat top. High of this move, that is. I gotta pull it. This move is weak. Alright, got a little break. Got a little bit more out of that move, but this is weak, man. This is starting to look more like a channel to me. When you zoom in, right? Like smaller time frame. If we went to like a 30-second chart or a 15-second chart, this would be quite the brutal little channel here the last, let's say like 15 minutes. So let's reset. We're sitting flat and see what else we can get here. I mean, you see that? That's actually a damn good close out of the bulls. Bears instantly say, I don't know about that. It's very, indicative of a range market. So we made about, I don't know, $1,000, $1,100 on that trade. Let's move on. Scripters, happy Thursday. Hope you killed today. Took the day off this morning due to a loss yesterday. Thought I'd recoup and reset. Do you ever have these moments? Do you ever have moments like these, or do you always push through? Yeah, I have, like everyone. I don't know. You know, these days, doing the job, like your job is to come in and just execute your edge, right? So, in almost every case, the end of day result is going to be within reason. So those days don't really happen too much anymore, at least in like futures, right? Where things are deep as far as liquidity. If you're using live protective orders, like if you want to trade naked in markets that are less news driven, like right now I wouldn't be doing that. Meaning without live protective stops and take profits, at least somewhere. Even if you don't plan on using them and you're driving manually, like with hotkeys, they should at least be out to protect you in case tariff news hits and the market dumps 300 points in 2 seconds. Right? They should at least be out. And if you're doing those things, keeping everything in check, then, I mean, realistically, those days should always be within reason, even if you have bigger red days. So it doesn't really require much of a reset at that point. But if you had an outsized loss because you made a mistake or something, then yes. If you wake up the next morning and you're still feeling kind of emotionally fueled, and you don't trust yourself 100%, I would not trade. It's not worth it. Just you gotta cool down. You gotta cool down, reset, come back when you're good. That being said, don't be one of those guys, you know, that takes 3 weeks off. I think those people are just scared to trade. Okay, ATR is at about 13. I'm sorry, it's at about, 12 and a half. It's getting lower and lower and lower. That's all right, we can manage that. The range on these last 5 bars has been between, pretty much the range on all 5 of the last 2-minute bars has been below 10 points. So this is a tight little range here, okay? So if you're gonna go buy low, sell high in this little tiny range here, like this kind of thing, I can't do it personally. I gotta wait for something to break a little bit and just widen things out. Not necessarily break and go, because it's a range market, that's unlikely. But at least a little bit of a widening out of this range would be very helpful. Christian, yesterday afternoon, I started the day, I was red at the end of the stream. A moderate amount, I would say. It wasn't big, but it wasn't really small. I was red like a moderate amount at the end of the stream, and I finished the day break even. I did not get back to green, but I just put my head down in the afternoon, and there were some clean setups, and I finished break even, and I was like, all right, market closed, and I left. You know, I think it's important, though, to have those days because it just reinforces in your brain that it's like when you do the right thing, you always come back to that mean of slowly making money over time. Not like slowly, right? But you know what I mean. Like, you can have a red day, and then a second red day, even a third red day in a row, right? And then all of a sudden, if you just continue to make the right decisions and execute what you know is your edge, you get back to baseline. Then you have 6 green days in a row, and it all kind of levels out, and you're like, oh shit, it's the end of the month, I made money. I remember from, the 8th to the 12th, I had a really bad streak, and here I am at the end of the month in the green. There's no secret here, by the way. Everyone's gonna be like, well, what do you do to get through those moments? Like, how do you not care? you just do it more. You go through it more. Eventually you get so desensitized you just don't even care. Because you're just doing your job. It's like you're going to work. You know at the end of the 2 weeks you're going to get a paycheck. Okay, this is us going to work. We execute what we know is our edge. We make the best decisions we can. We make adjustments if we need to as the market shifts. And we know at the end of the month we're getting paid. Most months, if the sample size is big enough, right? Yeah, cryptors, that sounds like about the best thing you can do. You know, on a day like that, one of the best things you can do, man, is just go get under some monstrous weight, do about 10 sets of junk volume, and go to a place most people never visit. And you'll feel better after you do that. This is really a slow grind. So this whole range, guys, we're looking at about 10 points. I gotta wait until it makes a move. I'd prefer to see a rollover because to the downside, when you need volatility, downside moves are the quickest way to get there. Realistically, I mean, I know that sounds, you know, you want the Nasdaq to go down. That sounds kind of like bizarre, right? Because we all want it to just go up forever. But reality is, you know, intraday trading, we need volatility. Right now, volatility is not what it could be. Quickest way to get there is if we could see a rollover. But, you know, I'll take whatever the market gives us. All I need here is for this 10-point range to widen out to maybe 20 points minimum. And then we can start hitting it again. Yes, Javaz, exactly right. Okay, range on this bar currently is about 7 points. Almost 8 points. If that expanded maybe 15, all of a sudden I'm interested. In that case, in getting long. But right now, for me to buy low, sell high mentality in this little trading range, again, I need this thing to widen out from 10 points to maybe 20. Which can happen in just a bar or two. We just need to see it happen. All right, big wick back here. That wick is, you know, half or more of that bar, so nothing to do for me there. On to the next bar. We're a minute 50 out. All right, don't go anywhere. I'll be back in 2 minutes. right, we are back. Kind of still waiting for this little range to widen out a little bit. I'm not against taking a trade here, but I just need to see the right thing occur. We have not seen that yet. The average range, by the way, we're now at 10 for the average range of a 2-minute bar based on the last 20 minutes. Oops, one quick second, 1 sec. All right. There we go. Come on, let's see a nice bear bar closing near the low here. And that could be a trade for me. To get long, by the way. Okay, we are finally getting a reasonably sized bar here. We have 1:05 left on this 2-minute bar here. I need to see how this closes. If we see this bar close near the low of the bar, but inside of this wick low, I will buy the rollover. And then if this ends up being the reversal, fine, I'll cut it. But right now, I'm interested in participating to the long side if this holds up. If this breaks, then all of a sudden the bears have a bit of a stronger argument. All right, 28 seconds, see what we get. Ooh, big wick back upside there. Look at that. Yeah, you see that? Nothing there for me. That's what I was kind of looking for after the close. Buy the rollover, look for a push back up into this little range, bet against the breakout. But that big wick up came a little early for me. All right, on to the next bar here. We got 1:45. Now, a couple things to pay attention to. This is a 5-minute chart. 23,000, of course, tier 1 level that we've been stuck to for days. And the 20 EMA on the 5, which, you know, people watch. We know that humans are watching that, so algorithms, therefore, are also watching it. Is right at about 992. So we got to keep an eye on all that. However, if this bar continues to form like this, I mean, kind of a big ask. This was looking like this. All right, 27 seconds. And we get a wick back upside there. Damn. We have 50 seconds left on the 5-minute bar. I'm interested to see if that ends up dipping back down and closing near the low. If so, we could execute off the 5-minute, which I'm very open to doing. Here's the 5-minute look currently. All right, 10 seconds out here. Yeah, not there. Inside close there, no trade. All right, next bar here, we're a minute 55 out. If we can see this push lower and give us a nice clean close, then we have to think about the 20 EMA on the 5. Currently at 993 3/4. So the 20 EMA on the 5-minute is right here. But we've seen it tested a number of times now here today. Again, this is the 5-minute look. And it's finally giving way a little bit, so... Again, 23,000 tier 1 level. Got to pay attention to that. All right, minute 12 out. All right, I will get the copier ready to go. See if we can get it closed beneath this previous wick low. And I would be open to shorting right at 23. Oh, it sounds crazy. I'm open to it. Bulls are going to wick that back up inside. You see this? That wick is at least, well, probably about half of that bar. Can't do it. Close inside of this wick low. The Bulls don't buy it quite yet. Got to give it one more bar here. We got a minute 45 out. Rick, how'd you learn this? Price action, trial and error, baby. Common sense. And then a whole lot of trial and error. I mean, listen, the entire strategy here is price action, but if you had to describe it, we are determining what kind of market is it on the daily chart. Right? It's a range market. What kind of market are we looking at intraday? Intraday, they're at 5. I mean, it's a range market. You can't call this a trend market, right? There's a lot of overlap, kind of a lot of back and forth. You're mixing bars. Sure, you have little periods, maybe a small bear trend, small bull trend, but all in all, intraday, it's still a range. So then you can look for little continuation scalps inside of the range and then buy low, sell high mentality, which again is price action, common sense in a lot of ways. Nice clean close. Limit order is out to get short, and we are sitting short. I will risk the bar previous to the signal bar. That little guy. We'll do that, and we'll leave this order out as a protective take profit order in case we get some crazy news, and I am driving manually. And there is the open P&L. All right, about 7 points in the money. Decent little push here. See if we can get a bit of a harder push down through. And we have broken, of course, 23 and the 5-minute 20 EMA. Beautiful. Pull that there. What was that, about 1,300 bucks? All right, we are out. Sitting flat, on to the next trade. Next idea here. 35 seconds out until the close of this 2-minute bar. Let's see what we get. All right, 15 seconds. Let's see if we have to take a re-entry. See if that becomes a thing here. And that will become a thing here. And we got a risk. Signal bar. There you go. There's the open P&L. See if we can get an even better push here. After that necessary re-entry that market told us we got to take. Yeah, take 8 points there as it slows down slightly. We got a minute 15 left here on this bar. We are now sitting flat. Another maybe 700-800 bucks there on that scalp. Let's move on. Again, if you're going to scalp moves like this, man, you got to be willing to re-enter. Otherwise, you're better off just swing trading it. So we got 60 seconds left here on this 2-minute bar. Let's see what we get. Yeah, see his wick back upside? In a range market, that's why I prefer to scalp these moves. Because if I don't get the re-entry, I want to have already been out while it was there. Because in range markets, these wicks, man... I guess what I mean to say is, in a range market, swing trades don't go as far, right? So when you get a little trend like this, it's... I just prefer to scalp it. Because I can take my money when it's there, book it, and then if the re-entry hits, I can still participate. Do I miss out on a few points compared to if I just swing traded what ended up being a huge move? Sure, but a lot of times they don't end up being a huge move, so I prefer to just scalp it. And you can see here, this is not a re-entry. Right, we took our profit while it was lower. And then we get this wick back up, range market. So if we get a re-entry, I'll put it on. But if we don't, I already participated, took my money, booked it. Dusty, do you ever use trail and stops when driving manual? Not too much, no. I'm not like a big trail and stop guy. More just price action. Not against it though. If you see me using one someday, maybe. Maybe it fits in the market environment someday. But nah, I'm not huge on it. Cryptors, thanks everyone. Ended up feeling better after the reassurance and just made a quick grand. Thank you, Team Wrench. Been watching since 2021. Well, good to have you, brother. Yeah, you know what, Dusty, though? Dusty was asking about trail and stops while driving manual here, meaning finger on the hotkey, managing due to price action. Or based on price action more so. No, Dusty, I'm not trying to, shit on trailing stops at all. It's a tool. That's what it is. If you like it, if you find when you dig through your data that it makes your data look better, then use them. All I'm saying is, for me, it doesn't make my data look better. So, I don't hate trailing stops. I'm just not a, big user of the tool. Very neutral about everything here. If it makes your data look better, man, do it. If it doesn't, throw it out the window. Zero attachment. Don't get married to one idea. Except price action. Because it's the realest. All right, we are 90 seconds out here. Let's see what we get as far as close. See, it took a little bit of a breather, not uncommon. A lot of times in a range market like this, you'll end up getting... Now, I'm going to be honest. This push to instant reversal, not common. Not common. This usually ends up a sideways range and then either second leg up or reversal. This here could very well turn into a sideways trading range. So if we see a test down here and a bounce... all of a sudden I'm thinking, ooh, sideways trading range potential. But if we end up breaking this hard, I'm willing to re-enter for another leg push downside. Again, just scalping, not looking for swings because range markets just can't trust them that they'll go very far. Gotta book the money while it's there. Giovanni, I can see in a trend market as it climbs, moving it up under the next candle. Yeah, like a manual trailing stop. I could see it. Let a runner run, maybe. Yeah, Joe, in a trend market, things change. 100%. 100%. In a trend market, if we were in like a bear trend market, I would have taken, what was my first scalp? I think my first entry was this, right? Because that was a beautiful entry. Second entry was this. 2 little winners on the scalps. I would, if we were in a bear trend market, I would have entered here and still been in the trade. And then, yeah, you know what? If I'm entering with a multiple on the leader account, I would scale out. Obviously, right now, my leader account, I'm sacrificing one funded Apex account to be the leader account, and I'm using one micro so that I can ratio the rest of them without thinking too hard about it. So scaling out wouldn't work right now, but that's on purpose because we're in a range market. I don't really need to scale out too much. Am I against scaling in and scaling out in a range market? No. No, not at all. Just right now, I'm not doing much of that. Okay, we got 1 minute and 13 left here on this 2-minute bar. Let's see here. How we get a close here. Again, got to be thinking, hey, does this immediately reverse and go higher after we just got this? Or does this turn into a sideways trading range? I tend to lean towards sideways trading range, but I want to see it occur, which means I want to see if we get a strong close out of this bull bar. I'm not going to buy it just because I want to see if we get rejected and turn into a trading range, because I think that's more likely. Now, I could be wrong, and if you buy this, you know, closes near the high, you buy it, it rockets, man, you'll leave me behind. But right now, I do not trust this bar to not just turn into a sideways trading range. So I got to sacrifice, even if this is a good setup, I'm going to sacrifice it to see how that plays out. I want that information before I take a trade. Or another trade, I guess. 13 seconds till the moment of truth. Small wick back, but decent close there out of the bulls. Now, do we see the bears wick it back in, up sideways trading range, rather than big continuation move? Yeah, right off the rip here, it looks like bears are trying to do what we just talked about. Might say, how do you make that assessment? And by the way, we could still rip higher. Not enough information yet, 25 seconds into a bar. But if we do turn into a sideways trading range, you might say, how did you know that was coming? Well, I didn't. All I know is that the probability as of late, because I watch charts all day and have for a decade, nearly a decade, lately especially, we're seeing that when we get tight moves. Again, this here, weird. We have not seen instant reversals like this happen very often. Usually tight little moves like this, go sideways before making the second move, either a second leg or a dump off, right? In this case, more than likely to go sideways for a little bit before either second leg downside or reversion back upside. That's more than likely. Now, if we get a quick little reversion here, you could say, okay, well, very short-lived 6-minute sideways channel and then a big push. That's kind of interesting. That's not something we've seen. We saw it twice. So this bar and the next bar, very important for us to get more information here. 35 seconds till the rollover here, this 2-minute. Inside close, see that bar, shrinking bull bar, closed inside of the previous wick high. I mean, that's not the strongest close we could have seen, right? So this bar becomes very important to give us that information we need to make our next decision here. Corey, good to see you. Appreciate you. All right, man. The Bulls are trying to put it together here. Let's see if they can reverse this thing. This right now is the test of not only the 20 EMA here on the 2-minute, which you guys know I care less about. It's just there, I don't know, I guess to give me context to where we're at. But this is the more important one. The 20 EMA on the 5 has a lot of watchers. I don't give a shit, but self-fulfilling prophecy, so I have to care. There it is. There's the test. Now, we got 1:20 out from the close here of this 5-minute bar, and we are now at 15 seconds till the close of this 2-minute bar. So let's see here. Coming back into 23, all right? I'm not against taking trades right into 23 if the setup is there. And it is there. I got to get long. And I am initially going to set my protective stop order there. And I'm now driving manually. There we go. There is the open P&L. Let's see if we can get a decent little push up through 23. Yeah, just a quick little scout mentality here. Ideally quick. We'll see how long it takes. All right, there's the test of 23,000, tier 1 level. Let's see if we can push through. Come on, Bulls. Don't lose strength on me now. Not bad. Decent little push. Beautiful. I will try to pull that. We'll pull that at about 900 bucks. Ish. All right. Another decent little scalp. Let's move on. Bruce, just want to say thanks. 5 Top Step X accounts taking a $6,000 payout total over all accounts. Awesome work, Bruce. Awesome work, brother. That is, you are getting into full-time territory. Good work. Gotta love to see it. Now, Bruce, let's 10x that shit, huh? Let's take a 60,000. If you guys haven't yet, please, hey, hit like on the stream, man. Helps out tremendously, really does. Very much so appreciate you doing that. You're good, Loaderfuse. All right, Chris, hope you had a good day. Yeah, you know, Lurt says I took it early, the long that is, like the long scalp that I just took. He took it a little earlier than I did. have to practice waiting. You know what? There's a lot of ways to make the numbers work here, right? I mean, realistically, if somebody wants to take a trade a little earlier than me or a little later than me, all that's shifting is potential reward to risk and probability over a big sample size. If you take it early, guess what? Reward to risk is potentially quite a bit bigger. Probability is a little lower because you don't have as much confirmation that the opinion is swinging yet. If you take it later than I do, reward to risk is even a little bit lower, but probability is even a little bit higher. Right? I like to kind of just split the difference. Doesn't make it wrong though if you took it later or earlier. Just makes the data a little bit different. Doesn't mean you don't have edge. You know, take whatever balance of those two, probability and potential reward to risk, feels right for you. Might be different than what feels right for me. All right, now we gotta see, does this turn into this kind of thing? And then an overarching big potential descending channel. That's what we gotta keep an eye on. But if this just takes out this wick high and makes a big push up toward this little high here, then all of a sudden we're in kind of a different boat. This is one of those moments of truth, kind of that pivot point, not in the way that maybe you're thinking about it, but that pivot point moment of truth where we got to see what happens here. Does this lose steam and fade, or does this pop through and rip higher up toward here? That changes my decision-making process quite a bit. Because I mean, you look at the 5 minute, this is a 5 minute chart here. You see what I'm watching, right? Either we're maintaining this big overarching bull channel that's been a thing for, 2.5 hours, or maybe we pivot and turn this into a little bear channel, which is entirely possible. A lot of that hinges on what happens here in the next 5-10 minutes. All right, 30 seconds out here from the close of this 2 minute bar. Let's see what we get. Doji, man, Doji, we're looking at this kind of thing here. Now, here's something else to think about, by the way. Again, do whatever makes you money. The point here is to make money. The point is not for me to, get you to do what I say. I don't give a shit. Make as much money as you can. If it's the complete opposite of what I do, great. I don't care. We're here to make money. But at the end of the day, I know a lot of newer traders, because I kind of felt this way too in the beginning. When this kind of thing happens here, it starts to feel like, okay, volatility's down, it's safe. I can dip my toe in, let's start taking some trades. As compared to this and this. Let me tell you something. Here and here, the potential edge is far less than here and here. Most beginners trade this, then this happens and they wait. and then they trade this, and then maybe another big move happens and they wait. If you're just getting started, try to flip that. Keep your risk managed, which means trade small. You're like, well, volatility's up. Yeah, trade smaller. You're scared because you're trading too big. If you're new, try not to trade this kind of thing. Try not to trade this kind of thing. Avoid this. You should be trading, you know, those last 3 scalps that I took, entered here, took profit in on this bar. Entered here, took profit down here. Entered, what was it, here, took profit up here. Those are the scalps you should be taking when the edge is a little bit more clearly defined, right? So let's see how this bar closes. By the way, this is a 5-minute chart. You might be asking, are you gonna take that? Yeah, we're kind of coming right dead smack on top of the 20 EMA on the 5. I know the bulls are trying to watch that. Right at 93, so I'm gonna give this one more bar here on the 2-minute. See if we can get a push down lower, at least below 90. Joseph! Just joined based on my friend's recommendation, totally right. Already learning more. Cool, brother, good to have you. Good to have you here. Just trading price action, man. Doing what makes sense based on the current market environment. You try to acknowledge, hey, what's the market environment on the daily? What's the market environment intraday? And then take setups that you know have edge for you in certain market environments and apply them. That's what we do. No BS. We're just here to provide for our families, do the best we can. Try to scale this shit big. As big as we can. And by the way, we have a lot of time. You don't need to rush to scale it. There's plenty of time to scale, but you don't want to, you know, the old stereotype, you don't know how long you got. But on the average, most people here, we're probably going to live longer than we think, right? The way that medicine is going, the way that artificial intelligence is being applied in the healthcare space. It's crazy. Lots of time to scale, but still gotta light a fire, you know. Okay, here we go. Let's see. Gotta get short there. That's a setup for me. And I will set this right above the bar previous to the signal bar. You could say, well, I'll set it up there. Yeah, I'm gonna set it there for now. And there you are. There's the open P&L. Let's see if we can get a little bit of continuation here. For a scalp, driving manual. All right, Bears, come on, take it down through. So we gave up 23K. That is a tier 1 level. We gave up the 20 EMA on the 5 yet again. This is a very similar setup to this one that we took. Now let's just see if this one can work again for us. Minute 10 left here on this bar. Again, I'm driving manual. We'll see how this closes. And if I need to manage early, we will. $45 seconds out here. All right, we gotta get ready. I mean, that's an inside close. My thought process is always, okay, if I were flat, would I get long here? And the answer right now is no. No, I wouldn't. So you leave it on. If the answer was yes, I would have cut that immediately, but the answer is no. By the way, this is kind of a suck right back up to the 20 EMA here on the 5 minute. The market has paid little attention to this since about almost 2 hours ago. So we'll see if that continues to be a problem here. We have 26 seconds left here on this 2 minute bar. Let's see how we close here. Ten seconds. Inside close. On to the next bar here. Still driving manual. All right, minute 15 out. See the bulls here trying to tighten this thing down. You know, you look at the 5 minute chart. There's the test. Again, still the bull case here, right? This is turning into a wedge. We're currently in the higher end of the wedge. But still, this is that bull case here. They're failing to regain these wicks. So if they can regain that wick, obviously that'll already have me stopped out, which is what I want. Let's see here. We got 25 seconds left here on this 2 minute bar. And still driving manually, finger on the hotkey. Ready to pull it as soon as I need to. Very high probability that we take out this wick high and stop me. Obviously, I'm not moving my stop. Okay, that'll stop us out there. All right, on to the next. It's very interesting, man. I do like the setup that we got there. That was actually a very nice setup for me. We just got burned on it. It's all right. So this is one of those situations, I mean, especially if we look at the 5 minute. If we look from here on, so basically the last 40 minutes or so. Well, I mean, you could even argue back here, maybe the last hour and a half. it's like, okay, I'm kind of confused here unless this breaks. This wick here. And you guys know what I always say, when there's confusion in the air, it's a trading range. And your default mode should be buy low, sell high mentality. Okay, now that for me, I just did the opposite of that, which again, I would do again, but now with this more information, if we had the same setup down here, rather than selling that rollover, which is what I did, looking for maybe some stops down here, or at least maybe, you know, taking out this wick low for a scalp. Rather than doing that, I would be looking to buy that, you know, sell this kind of thing. So it's good. We have updated information. Let's keep moving. There's a doji close. More evidence of a range market here. Of course I have. I've lost them due to copy trader problems. I've lost them due to losing streaks. It's part of the game. Listen, if here's the business model of prop. Let me just help you skip months and months of figuring this out. The business model of prop trading is to figure out how long your average funded account lasts, how long your average funded account costs all in. Okay, that includes any failed evals to get to the average, activation fees, all that, and then figure out what your average ROI per funded account is. You're going to win huge on some funded accounts, and some funded accounts you're going to get funded and then hit a losing streak, and you're never going to take a payout on them and blow them. And then some funded accounts, you're going to take 15 payouts on them before you ever even get into drawdown. That's the business model. Don't have this weird expectation that you need to hold on to each funded account for 25 years. If you look at the statistical probability of having a certain losing streak, if that were even possible, you would never take a payout because you'd be trading so small. Right? All you need to do is get a positive ROI on each account on average, and then scale it as big as you can. It's very simple. Of course, to do that, you have to have an edge, which is not simple, but it's kind of the whole point of what we're doing here every day. No, Taz. No. I trust my eyes more than I trust anything else. Speaking of which, well, hang on, sorry, let me redraw that starting from a new starting point. Right? I mean, clearly, so you know a lot of people are looking at this, bulls and bears. Roy, would you do the monthly fee or the lifetime once you pass the evals? For me, I always do the lifetime. Because I know that I know how long my average funded account is going to last, and it's well over the break-even point of going lifetime. So, if on average you're going to hold your funded accounts for any longer than 1 month, because think about it, you pay the monthly fee on day 1, and then you pay it on day 31 again or whatever, and now you're already over what the lifetime fee is. So if your average funded account lasts longer than 1 month, which, you know, I think it probably should be on average, unless you're like super aggressive, which is fine, then you should do the lifetime. I always do the lifetime. That doesn't mean I'm looking to hold it forever. I don't care. All I need is a positive ROI from each funded account on average, which I know is there, plenty. So there you go. Okay, so we know that this is here. Let's clean this up and get rid of it just so we can keep our eyes fresh here. You guys know, I don't like to have too many lines on the chart. I put them up there so you guys see them, and then we like to pull them. But that being the case, range market, range market, range market, if we do get a bear bar closing near the low here, you would say, well, it's a sell, right? In this case, for me, I have to buy that. I have to buy that. I know it feels unnatural, but we just talked about this, and here we are getting another opportunity to do so, so I have to buy that. I will put my protective stop order there. And look to see if we can get a reversion back up into the range. Oops, there we go. There's the open P&L. Quick little scalp, 8.25 points, pull that off and move on. That worked beautifully, just like this one. Now I shorted this, right? Before I had more information and got burned on it a little bit. You get more information, you make the adjustment on the fly, you say, okay, we're in a range, man. We're in a range. This is not a continuation market. Tried, didn't work, right? In hindsight, you know, had I had more information, maybe you buy that. I sold it, didn't work. Wedge is very clear. I think it's too obvious to sell the continuation again. So instead, I buy low, sell higher. Boom. Get the rollover on what a lot of people would think is a sell setup, and we get a push back up into the range. This exact thing, guys, this variation, the exact same setup, very similar. Opposite decision. This is what I mean when I mean, like, you have to have setups that you apply based on the market context. It's everything. Everyone's ignoring market context for some reason. You can't do that. It doesn't work. It doesn't work. That is everything. The setup is the simple part of this. The market context is the ever-changing liquid thing that you always have to have your thumb on the pulse of. Don't ignore that. Number one, market context. Markets have inertia. They are resistant to change, right? One sec. Back in a sec. All right. All right, guys, well, we're kind of coming to the peak here of this little wedge, so I think now is about good a time as any. I'm going to hit lunch. I will come back, scalp the afternoon. Hope you guys have a great rest of your day. Hey, I appreciate you joining me. I know we have a lot of new people here today. If you have not done so, please subscribe to the channel. I am streaming my scalping live every morning. All right, guys. Hey, code BIG, best deal always, Take Profit Trader and Apex Take Profit right now is running a hell of a deal. Best deal I've ever seen them run, 40% off, and they wipe the $130 activation fee. You don't pay that if you use code big. Apex extended their good deal. It is still 80% off and single day pass with code BIG over at Apex. All right, guys, have a great rest of your day. Have a good one. Enjoy it. I used to be of the opinion that, you know what, I don't give a shit if we're having fun as long as we're making money. And then you start making money and you realize, you know, I kind of want to have a good time. I didn't become a trader to, you know, not really enjoy showing up to the charts every day. So enjoy the day, but do your job. All right, guys, see you tomorrow. Have a good one.